Hey traders, welcome to another educational video from Global FX Education. Today guys, we're going to be speaking about a very important concept in the market, and I would like you guys all to focus tonight because this is the golden way, the golden strategy. Okay, how to use this type of strategy to win the market very easily, and looking for an entry. This is the one. All right. Now, tonight we're going to be speaking about the market environment, how we're going to use market environment to look for an entry. Okay, it is quite simple and it's a very simple concept, guys. It's a very simple concept, and it's right now. Get your pens and piece of paper or your trading journal and start writing down what you need to be looking for. Okay, so let's start, guys. Before we start, I would like you guys to leave me a comment below. I would like you guys to hit the like button. Let me know in the comment section which next video we should start from this analysis video, and also make sure that you guys leave me some of your love. Right. So market environment. First, I'm going to explain what we need to use and what we need to basically look for in order for us to get market environment. We need these 3 points over here, which is a multi-time frame analysis, COT data, and patience. This is the 3 different things that you need in order for you to get the market environment and also get your entry and win your trade. This is what you need, is multi-time frame analysis, which means that you need to do a multi-time frame analysis of the monthly, the weekly, and the daily. All these 3 time frames should be lining up together. They should be line up together. They should be bullish together. They should be bearish together. They should be the same. If the monthly looks bearish, the weekly should be look bearish and the daily should look bearish. Okay, if the monthly is bullish, weekly should be bullish and the daily should be bullish. So very easy. If they do not line up, then it's better to sit and wait. Okay, multi-time frame analysis. Doing your multi-time frame analysis will help you to understand where the market is going to go and where is the market going. Now, the second point is the COT data. Okay, reading and understanding the COT data is important because why? We know where the market is going to go. Even though the market is basically the COT data is posted and we are a little bit late to grab the info because we are retail traders, we are not the banks. COT data is quite important. It's a very important thing, guys, to look at. If you want to know where the market is going, then you should definitely learn how to use the COT data. So these are the 2 most important things that you're going to be looking for. Okay, it is multi-time frame analysis and COT data. And then the third one is, of course, patience. When I mean by patience, it means that I want you guys to wait for the market. When we are patient, we are going to wait for the market. We are never going to chase the market. We are going to rather wait for the market to come to us instead of we going to the market. Okay, now without further ado, let me show you guys how we're going to find a market environment and how we're going to use this type of method to get a good entry and to find your entry on a multi-time frame analysis. So I've got over here something that I drew up for you guys. By the way, guys, I was going to write a PDF about this, but I thought it would be better if we have a video basically a video educational video, because it will help you to understand a little bit better instead of a PDF. Over here I can, I have a lot of, I can give you guys a lot of emotion and you can understand a little bit more better with a video format. Now let's say, for example, we are looking at this pair, and over here at the support, you can see here there's a support area here, or a demand area over here. And basically what we have found is we have done our multi-time frame analysis from the monthly, weekly, and now we are on the daily time frame, and we are looking for a push to the upside. We're looking for a bullish momentum or bullish move to happen. Okay, because we know that this is a strong area on the monthly, weekly, and the daily looks like it needs to make a push from here and make a move to the upside. So this is a very important concept. Like I said before, guys, you need to do this first multi-time frame analysis, read the COT data. So a lot of traders would have start to buy a lot of traders would start to buy around here because they thought it's going to go up. It did go up a little bit, but it's not the move that we are looking for. What we are looking for is a big move. Because we are swing traders, we need to look for good low risk reward trades. So once the market reached over here, okay, for example, let's say the May 9th, the market reached to here, and that week, at the beginning of the week, you saw that the market, the banks, the COT, they had added 4K longs on the previous COT data release. Okay, so on the daily, yes, we know that in this area at some point we need to look for a big push to the upside. But now the problem is, what how do we tell whether that the market is going to push from here or not? Okay, and I'm going to show you guys, because this is where we need to monitor. We need to monitor the market environment in order for us to understand whether the market is going to actually push, keep make this big push that we expected in the COT, or whether the market is going to go and continue its bearish momentum. Okay, so if you have a look at this, I will explain to you now. So here is the monitoring. We are monitoring the price action here in this area, and we go down to the 4-hour time frame to see what is going on the 4-hour time frame. And once we have basically the 4-hour time frame, just let me adjust this quickly. Once we have the 4-hour time frame, you can see that the market has basically 4-hour time frame, the market has still a very bearish momentum. But when it reached the area of importance, or the area that we are monitoring, we start to become to become ready. We start to get ourselves prepared for our trade, and etc etc, because this is the place that we are looking for the market to make a move. You know what I mean? Before we start with this market environment, I will just explain quickly to you guys, and I just explain to you very briefly about how market environment works. Okay, market environment is a very simple thing. We have in the market, when the market is in a bearish momentum, when the market is bearish momentum, we have what we call a lower high and a lower low, lower high and a lower low, lower high and a lower low. So this is typically a bearish market, and a lot of people should know this point. Is this is a bearish momentum. When the market creates this type of momentum, this is a bearish momentum. So at no point in this area or in this market we should be looking for a buy, because we can see on the 4-hour time frame that the market keeps creating a lower high, lower low, lower high, lower low, lower high, and a lower low, and then also a lower low over here. Okay, now the most important thing is when the market reaches to this strong area of demand on the weekly or the monthly or the daily, then we're going to be looking for a market environment change. So when the market environment change, this is a very important concept. You have to listen up. When the market environment change, you will automatically see that the market environment will change. Okay, the market environment will start to change in a different type of momentum. You will have a different type of momentum from the momentum before that you had this bearish momentum. Okay, so it created this low over here. Okay, it then came up and it then retested this structure that we had over here, which was this previous support here, which is now turned resistance here, right? But on the next move, it broke above this structure, which was a previous resistance point. It came down for a next correction, okay, possibly another support area here, came up again, broke through this resistance area. Now, for me, as a market environment and a swing trader, this is where I start to get interested. I start to look more closely to the market. It doesn't mean I go down on a different time frame, but I start to look at the momentum. I start to look at the market environment more closely and see what is the market actually doing. Okay, so from this point over here, it then came down again. It retested this previous supply area. Now this is a demand area, and then it created this. Okay, it created this. So you have quite a lot of structure being broken each time the market goes up. The market breaks above one structure, which is previous resistance, now turns support. It makes a new resistance up here, testing previous support over here. It then comes down to test the previous resistance, now turns support here, and breaks again above that resistance area. So this is where I start to get interested. This is where I start to look at my opportunities. When the market starts to create this type of move, it doesn't mean, guys, it doesn't mean that it's automatically going to go up. You need to monitor it, and you need to use a very open mindset. When the market starts to create this, it is then creating. It's creating, guys. If you look at this, I will show you. It's starting to create a type of momentum that we want to look for, the type of market environment that we want to look for. We want to see a bullish move. So we have this high over here. Okay, we have this low over here, which is a higher low from the previous low over here. We then have a higher high, plus we have a higher low, testing it as support. It then created another higher high. So what can this mean? Does this mean that the market is now creating or starting momentum change or environment change to the upside? For me, on a 4-hour time frame, if the market is doing this type of move, for me, it is not 100%, but it is 90% true that the market is now starting to reverse and creating this bullish move to the upside, because we want to see the market creating higher highs and higher lows. In a bearish market, you will find the market will create lower highs and lower lows, lower high, lower low, lower high, lower low. But when the market reverses and starts to move in the opposite direction, it will create higher highs and higher lows, higher highs, higher lows, higher highs, higher lows, and eventually the market momentum will become so great, or so many orders, so many buy orders. Because if you look at, remember the example here, we have 4K longs added, right? So once the market starts to generate the liquidity and the market starts to grab orders of banks, you will find that the market will start this move. It will start a very, very big move. So at that point, when the market has already made this type of momentum, that is where you're going to be looking for your swing trading opportunity. And when the market creates this big push to the upside here, that is when the market will have broken this area here. That is where the market would have broken this area here. For example, this is just an example for you guys. Okay, so there is always a strategy that I always teach my students, and I always teach everybody that I speak to and everybody that I know is if the market has created this type of momentum move, it's better to sit on your hands. Just wait for a while, because at some point the market has to come down again to continue up again. The plane needs to land. So I've made a quick example here. I've made a quick example here. This is the easiest strategy to grasp if you're a new trader and you need some help and guidance from um, from a good perspective and a good open mindset. Is that if the market creates an impulse, okay, once the market creates an impulse to the upside, once the market creates an impulse to the upside, at some point the market needs to make a correction. It needs to make a correction, okay? It needs to make a correction before it can actually start its new move to the upside, which is called an impulse correction impulse move. So this is where you should be waiting. You should be waiting always on the correction move. You should be waiting here. This is the basically the green light. Okay, this is the green light of trading, is the correction. We're never ever going to enter on the impulses. We are rather going to wait for the correction. That is point number four. Point number three. Patience. Okay, patience is everything. So once the market has created a nice impulse like that, we are always going to use our Fibonacci, and the market will most likely respect one of the stronger Fibonacci's, which I will explain to you guys in a different video. But this is basically how we are going to look for market environment change. This is what we're going to look for, and this is what we should be monitoring. When I send an analysis to you guys, you should be looking for this type of momentum change. Now, this is a bullish scenario, and I'm sure if you guys have watched the video this far, you guys will understand how a bearish scenario works. So I hope that this video was educational, and I hope it helped you a lot. I hope it let you understand the market a little bit better. If you combine all of these together, guys, if you combine the multi-time frame analysis together and you combine the COT data together, you should not have any problem with entries. You should not have any problem with your entry, because this is most most important things in the market is to be looking for this type of momentum change or environment change when you're looking for your entry. So tonight we discussed the market environment. If you guys would like, if you guys liked this video and you thought it was educational, please, I really like to see you guys comments and questions. Leave your comments and questions below, and I will get back to you as soon as possible. Thank you very much for your time, and I hope that you guys have a great evening. God bless you all, and I will see you guys in the next educational video.